All right, beginning with the news coming from US signaling borrowing costs will not change anytime soon. US Fed Reserve has held interest rates steady with moderate economic growth and historically low unemployment expected to persist through next year presidential election in US. In its final policy meeting on a tumultuous year when it was spurred to cut interest rates 3 times to forestall a slowdown fueled largely by President Trump's trade war, US Central Bank struck a remarkably sanguine tone, confident actions it had taken so far are working. The policy decision left Fed's benchmark overnight lending rate in its current target range between 1.5 to 1.75%, 3/4 of a percentage point below where it started the year. And after board disagreement earlier over direction of policy and dissents at its last 4 rate settings meetings, Fed ended year on the same page. The vote on its latest policy statement was unanimous, and the new economic projections showed 13 of 17 Fed policymakers foresee no change in interest rates until at least 2021. So while the decision not to cut interest rates further may irk Trump, who has demanded even lower borrowing cost, Fed's underlying message that US economy is in good place, it bodes well for the Republican incumbent re-election. The only 2 sitting presidents in the modern era not to have won re-election, Jimmy Carter and George H.W. Bush, both contended with unemployment rates more than twice the level under Trump. U.S. jobless rate is currently 3.5%. Still, Fed noted that global risks warrant monitoring in the midst of an ongoing U.S.-China trade war, as does possibility of a downshift in public inflation expectations. Overall, Fed policymakers see unemployment rate staying below the estimate of long-run sustainable level for another 3 years, even as most expect inflation by then to end up at or just a little above central bank's 2% target. And it is a win of sorts, or to say target achievement for Saudi Aramco. Saudi oil giant has topped $2 trillion target sought by Saudi leader Crown Prince Mohammed bin Salman. Aramco shares clocked up a second day of gains, defying some skepticism about state-owned oil firms' long-term value. The Saudi Crown Prince has made Aramco's IPO the centerpiece of his vision of diversifying kingdom's economy away from its dependence on oil by using $2.5 billion, in fact, it raised to develop other sectors. But that is well below plan in 2016 to raise as much as $100 billion via blockbuster international and domestic IPO. Riyadh scaled back its plans after overseas investors balked at the proposed valuation, and only 1.5% of Saudi Arabian oil shares were listed on Riyadh Stock Exchange yesterday. And the tiny free float for such a large company, while a 10% jump in stock on its Wednesday market debut was hailed by Saudi government as a vindication of its long-sought valuation support. It was largely from long Saudi and Gulf investors, with some analysts saying it is worth less. Aramco's listing was front-page news for almost all Saudi Arabia's mainstream media today, with headlines such as Aramco at the top of the world and a dream come true. Saudi Aramco has touched $2 trillion market value before pairing gains. An International Energy Agency report today pointed to pressure on oil prices, predicting sharp rise in global inventories. Now, despite an agreement by OPEC and its allies to deepen output cuts, as well as lower expected production by US and other non-OPEC countries.